Hey, welcome to another video of Simplicity Investment Watch. I'm Mark Goucher, and today is Tuesday, December 17th. First off, I want to apologize. It's been 2 weeks since I've put up a video. I've actually had some technical difficulties with my recording software, and in any case, I have that all replaced now, and I'm back up and running. So again, apologize for that, and that won't happen again. So I have several updates to the buy list. There's lots of stuff coming off of the list, and I've done changes of some things from a buy status to a hold status, and then hold status to buy status. So there are a lot of changes that I'll go over. Also, I wanted to say, based on feedback from the audience, from you, thank you very much. I made the list easier to read and understand. I made changes, and I will explain those when I get to the buy list. But before we get into the major market action, which is what I want to start with, so the market action for today, let's cover our disclosure. Okay, so we do not give financial advice, and this information is not for investment decisions. This is for educational purposes. The stock market is risky, and any trade or investment is expected to have some or total loss. The use of derivatives increases investment risk or potential loss. Do your own research before any trade. Please consult a financial advisor or professional to determine what is a suitable investment profile for you, given your investment goals and objectives. Okay, let's start off with the SPY, the ETF for the S&P 500. Basically, this and everything else was down today. The SPY was down 41 bips. This is today's action right here. This is basically a doji, which is just a nice little cross symbol for total indecision. There are no winners and losers. The market pushed up, the market pushed down during the day, and then it just ended just right in the middle. So what we have, say, what is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, roughly about 10 days, 2 weeks of trading here that has just been in this very tight pattern. The election was over here, and then it settled back. It filled the gap a little bit, and then from there it went. I set an anchored VWAP off the low. Buyers have been in control since. I set another anchored VWAP off the high right here, and it's been sideways. So there's a lot of indecision, and basically the market seems like it's just waiting for something. Some will argue, or you can reason that the retail sales print that came out this morning, it came in at 0.70%, which was higher than expected. And that may have caused the step back today because basically that's an inflationary pressure. And oh no, the Fed might change its flight plan based on numbers that suggest inflation is still in play. Most likely it's just everyone taking defense or getting on the defense for what potentially could be a Fed surprise tomorrow. Yes, tomorrow, Wednesday, is the Fed decision on the Fed rate. So that'll really be the game changer as far as where the market goes from here. In any case, that is SPY. All right, let's look at QQQ, which is the ETF for the NASDAQ. And this has been on a roaring uptrend since, what is that? The 15th of November, basically a month ago. It's just been up. And what this right here is interesting. So this pattern is a harami, if I could say it right. Basically, it's a Japanese word for pregnant. We have a pregnant candle here. So this, when you ever have a long candle and then you have a small candle that fits totally within this candle next to it, that's called a pregnant candle, harami. But it's more importantly, it can be a pattern to suggest top. Whenever you have an up candle, clear candle, and then the red candle or down candle in this fashion, it suggests that that there could be, just downtrend from here. I mean, it wouldn't be unreasonable to go with that. If you think about, look at that, that's 7% gain roughly in about 20 days, a month's worth. That's a lot. So this is due for a little setback. Maybe the Fed decision or a revelation tomorrow will be the catalyst for that. The market's always looking for an excuse to fulfill its destiny of ebb and flow, up and down. So, any case, this in itself is not what I'm going to go off of. I need to see follow through on this. So if we start seeing a lot of red candles and downward action, yeah, that's what it is. But this also, like it could just continue up. Tomorrow could be a rip roaring day. Anyhow, that's something I'm watching very closely on the QQQ. Okay, the ETF for the Dow Jones. Well, this is pretty pretty ugly. You have about 9 days of downward action, and you even have a gap right in here. That I heard it somewhere in the news. I forget this. This hasn't happened in quite a while, at least for the Dow Jones. So this is pretty bad. What is interesting here is right here, it found support on this line, which is the 50-day moving average. It fell through all these anchored VWAPs that have been set up from various highs and lows. This is the election gap. This is the low after the election. This is the high after the election. And I set up anchored VWAPs and all of that, and it's falling through all of that. But yet it seemed to have found a little bit of support at the 50-day moving average. If it falls through that, the Ichimoku cloud is right there. So somewhere right in this level, right in here, what is that, 430, 429? It could find support in this cloud somewhere down to 425. Beyond that, your next support is 417, the bottom of this right here. And you also have an anchored VWAP there. So that's what you're looking at for various support, possible support areas or locations. But right now, it seems to be finding support at the 50-day, and we'll see what tomorrow brings with that. For major economic news for the balance of the week, so today's Tuesday, we have Wednesday, Thursday, Friday left. Wednesday, basically, I've already mentioned it, the biggie is the federal funds rate is coming out at 2 p.m. Odds are that it is a 0.25% or 25 bip rate cut, which will cut it to 4.5%. So that's going to, obviously, that's going to be market moving, whether they meet that expectation, and more importantly, it's going to be the commentary that comes with that, which is what the market's going to be listening for, just to kind of project where the future is on this. Thursday, two big events. The two biggest events of that day. There's other numbers reported, but the two biggest ones are the final GDP numbers and the unemployment claims are numbers coming out. And then Friday, another big one that's just about as big as the federal funds rate, because the Fed looks at this number, is the core PCE price index. That's the personal consumption expenditures, which basically is inflation on the consumer. The Fed, that is the favorite number for the Fed to watch. And that, like as I said, that's coming out on Friday, so that could be, that could be market moving as well. So there are a few events this week that could be interesting. All right, here's the buy list. So let's talk about the changes that I mentioned at the opening. First, I got a comment or comments that caused me to change this. So I used to have this all one list in which I would have my bearish and my bullish picks all in one list. I have separated them to make them clear. If I put something in green over here, they're like, okay, is that a buy? But yet I have over here bearish. So I kept one list as all my bullish picks and one list as all my bearish picks, and I'll display them in that fashion going forward. As far as the other color coding, basically it's a traffic light system. Red is stopped. They're going away. I'm moving them off the list. You won't see AA on there going forward, unless, of course, it comes back on the list because of my my screens and filters bring it back to me. That happens sometimes. The stocks come and go. So all the red ones are going to be removed. You won't see them unless the screens bring it to me. The yellows are holds, and the greens are good to go. Go ahead and action based on the strategy of the bullish strategy, like AFRM. Now, what I did here is AFRM is green, so there you go. You can action that, and it's bullish. But I also colored over here, made that green over here to indicate, to suggest, or not suggest, but to indicate to me and tell me that AFRM was a hold, but today I made it a buy. So I made this green. Same thing with all these coming out, like these reds. As of today, I'm taking these out. Chewy was a hold. I made it a buy, so it's green. Carvana is brand new. That just came on the 16th. I through one of my, again, end of market list. I go through the list. I find ones that are best suited for the type of investment style that we're into. So Carvana was added to the list. So there you go. DoorDash has been a hold, so no changes there. Disney was a buy, but changed to hold, so I made that yellow. Hood was a hold, but I made it a buy. Made that green. Kroger was a hold, staying on hold. On was a hold, staying on hold. Palo Alto, brand new, added to the list. And I'll talk about the chart in 1 second, but that one was just added. PayPal was a hold, staying a hold. Shopify was a buy. Now I moved it to hold as of today. Vertiv Holdings was a hold, staying there. Vistra was a hold, staying there, and Western Digital is coming off. On my bearish ones, so Abercrombie Finch and Celsius Holdings are both in yellow, so they're holds. So even though I'm bearish on them and I'm looking for an opportunity to go short or otherwise use some kind of bearish strategy where I can make money on things going down, these are a hold right now. I'm just waiting for the charts to show me the right thing. Devon Energy is coming off, even though it is, and I'm sorry if you're with the company, even though it's a perpetual loser, it's gone too far down in the time that I've been watching it for me to want to chase it anymore. It's beyond the point of opportunity. It doesn't mean it won't go down more. It probably will. But again, I do things according to the way that suits me and works for me and us. So Devon Energy is coming off. I did add First Solar as of today. So I added it for a bear strategy, and it's good to go. I got it in green over here, which means you can implement that bear strategy, and I'll show that on a chart in just a second. So those are the updates and changes to this. And let's talk about some of the charts. Okay, Carvana was added. I just mentioned that. And basically, I have all these anchored VWAPs set up on the various earning dates. This thing has just been consistently moving nicely upwards, obviously. The Ichimoku Cloud, the 50 is above the 200. All the actions above the 50 and the 200, which is awesome. And from the last earnings, I had a pop, so obviously they were good. And then it just kind of, the anchored VWAP, the buyers have been in control, no doubt. It's on the upper side, with one exception, but it's on the upper side. So, but I went ahead and gave this a buy. So it's green, it's good to go. Today was a doji, but I would implement any kind of bullish strategy against this, and this was a new ad. All right, Palo Alto, another brand new ad. So again, anchored VWAPs off the various earning dates. This one, it's been moving slightly up. And I have an anchored VWAP set off the most recent high, and it is now above that. So again, I'm giving this, it's still in TTM squeeze right here with these red dots. This is still TTM squeeze, But the action is telling me, it's above its anchored VWAP. It's recovered from whatever setback it had from the date of this high, which is 12.6, and it's good to go. And then lastly, my other ad for today was a bearish strategy against First Solar. So let's put the cloud on this one. So this one came down through the cloud, stayed underneath. It did fight its way back up, but again, got pushed back down. It continues to be beneath the Ichimoku cloud. It had a death cross right over here. Let's turn the candles off. Yeah, right here. This 50-day moving average moved below the 200-day moving average. That's known as a death cross. Over here, when the 50 crossed above the 200, that is a golden cross. That's a good thing. But this one right here, this is a death cross. So that occurred back in early December. And let's get the candles back on. So this just is showing all kinds of signs of down. I set an anchored VWAP on the low of November 21, and it rose. Buyers were in charge for a little while, but now it's pushed back down and it's below that anchor from November 21, which means it's back onto a bearish strategy, and it's good to go. This candle formation also is a beautiful thing for a bearish strategy when you have the wick like that. So it tried to fight its way up, but it lost, and the action finished down below. So this, you could buy a put against it. You could do like a poor man short, which basically you buy it's a calendar spread. You buy a leap put, which is a put that's several months out there. You just buy that, and then you sell a near-term put. So it's kind of like a covered call where you buy the stock and then you sell a covered call against it, so you make your money. So you can make money on that, or you could do some kind of bear call vertical spread, which basically in that situation you would sell a call somewhere around the 190 price point, and then buy another call, maybe 5 points higher, just so that if it goes against you the wrong way, you have that backstop. And I'll explain in a lot more detail in a future video about the vertical calls, bear call, bull put, all different types. But in any case, this is a bearish strategy and good to go for that. All right, let's talk about some covered call picks. So as I've mentioned in previous videos, I take everything that's on my buy list that's in green, good to go. And I load it into one of the services I use is barcharts.com. Great service, shout out to them. So I load all those picks into a screen or a filter that I set up that helps me identify what might be covered call considerations where you're going to at least you'll get a good return on it. So on this list, so first thing you'll notice that these are all for Friday, which is basically 3 market days away. So just for Friday, you could buy Carvana, which is new to my list. It's at 253, and you would buy 100 shares of Carvana, which is, for some of you, might not be possible with your portfolio size. Others may be so, but that's going to be a $25,000 buy plus or over $25,000 buy. But in any case, you buy 100 shares of that. Then you sell a call contract that expires this Friday, the 20th, at the strike price of $267.50. And so someone can take it away from you at $267.50. Now, of course, they're not going to do that unless this price gets above $267.50. So if it doesn't, you get to just keep holding on to the stock. But For selling that contract, selling the right for someone to take that away from you by Friday, you're getting $1.10. Options are in groups of 100, so they represent 100 shares. So really, it's $110 that you're getting paid, and that is a 0.40% return alone just on the $110 for your 100 shares. If it gets called away from you, you're going to get 5.4% appreciation on the stock alone, assuming that when it starts and opens up in the morning, it's somewhere fairly close to this 253 price. So you're going to get 5.4% on the stock appreciation. You got 40 bips on the selling the contract at 110. Put it all together, you got 5.9% return on 3 days work, if that all happened, and you do that every single week for the year, and you're at 717% return. Other ones on the list that may be a little more affordable: AFRM, $70, $71 stock. Sell a Friday contract for 75 strike. Someone can take it from you at 75. You can do that for 70 cents. So times 10, times 100 is $70. That's a 1% return just on selling the contract alone. If it gets taken away from you, you get 5.8% on the appreciation. If it doesn't get taken away from you, you just get your 1%, and you get to do it all over again. But if it got taken away from you, plus your 1%, it's a 6.9% return. Do that all year long, and you're at 833%. And then lastly, the even a lower price stock, Hood, $41, $42, whatever it opens up in the morning. It's a Friday contract. You can get it taken away from you at 44, so sell the 44 strike. You get 35 cents for one option contract. $35, so times 100. You get $35 for one option contract, and maybe you can buy 200, 300, 400 shares of that, depending on what your portfolio can support. So you just take that $35 and go 2, 3, 4x on that. In any case, you're getting 80 bip return, 0.80% return, 80 bip return on that alone. And if the stock doesn't get called away from you, you can just go ahead and rewrite another contract next week. If it does get called away from you, oh well, you got almost 7% return, 5.7% return. So grand total, if it got called away from you, plus what you got paid for selling the contract, it's 6.6%. And if you do that all year long, you're at 801% return. So there's some good ones for this Friday. And let's go into one more. Let's go 1 week out. And if we go 1 week out, you'll notice immediately that there are higher payouts on these for selling these calls. And what is that? That is a time factor. In options, there are these things known as the Greeks. One of the Greeks is theta. Theta is time. So these all have more theta. So because they're going out to 12/27, which is a week from Friday, which is the Friday after Christmas. So same deal with Gavana that I was just talking about on the previous for 12/20 expiration. Buy the stock, 100 shares, sell a call contract expiring 12/27 at 267.50, so someone can take it from you at 267.50. And you can do that for $219, which is $219 for basically what is 7 trading days if you take Christmas out of the picture, because the market's not open on Christmas. So 7 trading days, you get that, and you're almost at a 1% return. You get a 0.9 or 90 bip return just on that alone. So you're going to get paid that right away. If it doesn't get taken away from you, that's fine. Next week you can write another one. If it does get taken away from you, oh well, it gets taken away from you at 5.4%. Be aware, one of the downsides of these covered calls is if the stock shoots up to 300, guess what? You're only going to get 267.50. You lost all that opportunity above that, but that's the trade-off, and that's fine. I'll do that all day long. All year long. So you have 267.50 that gets taken away from you. Overall, it's a 6.4% return. And just to kind of get through the rest of these, as far as firm, same thing, $71 stock roughly, sell the 75 call for a week from Friday. This one's good. You get a buck 63, so $163, which is a 2.4% return for 7 trading days. Um, so yeah, and if it gets taken away from you, it's 5.8%. Grand total, if it got taken away from you plus the premium, you got 8.3% return on that. Do that all year long, and you're at 302% return. So there's a good deal. And then I mentioned Hood before because Hood's priced a little lower on the market, so 41.63. Still a good deal here. Sell the 12.27 contract at the 44 strike. You're going to do it for $94. It's a 2.3% return. So yeah, good. If it got taken away from you, you get another 5.6%. So it's 8.1 if all that happened at an annual rate of 296%. So these are the examples of 1227 contracts. Okay, that's it for today. If you have any questions or need to reach me, my email is mark@simplicityIW.com. I want to thank you very much for your interest in coming back to this site as you do. Thank you for your time. If you haven't already, please click on subscribe for this channel. And I mean, it helps you in terms of you can set up YouTube so that you're notified when new videos come up, so you know right away. And it helps me just gauging interest as to what I might want to offer or do going forward. And so once again, thank you. And remember, keeping things simple is really smart. All right, folks, have a great night. And if you're going to do any trading tomorrow, good luck. Take care. Bye-bye.